Morning, Fractal Effects team. Sorry, we're having some technical difficulties this morning. I think it should be fine now. We're still tracking the market from the morning session, so please make sure you read the disclosure in the footer section of fractaleffects.com before we get started. If you're following along with us today, make sure you do in a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. So again, today's a very similar setup to yesterday. So today's Thursday, and Thursday's footprint usually takes us back to the weekly range, which is all the way down there, marked out by the aqua line right here. That's the beginning of it, I believe. We have, just like yesterday, we have two double breaks. So we had a break to the upside with NAS, double break, which is usually sealing the deal and showing us the dealer's hand. But then we had a second double break to the downside. Now remember, these are the kind of conditions you don't want to trade. US 500 gave us a double break to the downside. So right now, US 500 is the more accurate pair because we only have one double break. At the same time, US 500 has already taken out Asia lows, which is usually our low-hanging fruit. It's created a new blue zone, so it could technically just bounce off this blue zone and head down to previous day's lows, which is past this 4-hour fair value gap. A lot of 4-hour fair value gaps were left yesterday, so it's sweeping a lot of these. But these are the kind of conditions that we cannot trade, and you got to be able to recognize this. This will save you so much time. One quick look at this, and you can see, hey, I got a double break here, and I got two double breaks here. That's an invalid trade setup. So we can't trade the indices. But I want to show you exactly how this works. How can you have this kind of divergence but still understand what the market is doing? Because essentially, this is a market translator, as mentioned before. So we've created a market translator, not an indicator, not a time lagging indicator. So you should be able to still read the market. So even though this is muddy as hell, and I would not trade these conditions, I'm still going to walk you through it with a high level of accuracy just to show you the difference. So as mentioned before, right now US 500 is the more accurate pair. It's created a new blue zone. There's a higher percent chance that we will take out previous day's low and run right into the weekly range, which for US 500 is a little bit down there. There's the aqua line. That's one of it. I can't see the other part. I don't know if that's the low of the or the weekly range or the high. Let me see here. Like I said, so many 4-hour fair value gaps were left yesterday, so it's hard to kind of see through them. There's previous day's low. The indicator paints them all out for you. It's just sometimes they can get clouded in any higher time frame PD array that you paint out yourself, which is what I did. I'm going to assume this is the low of the weekly range. I think the high might be right there in the end dog. That's why it's camouflaged. Aqua and aqua. Just zoom back in. So what am I waiting for now in a condition like this? Even though I'm not trading this, I'm still going to tell you exactly what we're waiting for. So just trying to zoom in again. As mentioned before, as soon as we go live, for some weird reason, our chart sees up. There you go. I don't want to play with them too much. So yeah, we're bouncing off this blue zone most likely. This is what happens when you play around with them too much. Sorry. My apologies here. Just going to give it a second, let it fix itself first, because it's just going to continue to zoom in and out. I'll wait till that stops. So what I'm waiting for is NAS to pull back and give us a proper setup to go short. That will fall in suit with US 500. Finally stopped. one at a time. Oh, this gets so annoying. Again, our apologies. I don't know if it's our streaming software. It's not our internet connection. We might have to upgrade this. Okay, I'll stop there. That should be good. So, as mentioned before, usually when you create a blue zone in real time, when you see a blue zone being created in real time, the market will most likely retrace there and then continue to push. If all the confluence matches, I mean. For example, we have a double break to the downside. Today is Thursday, a retracement possibly back to the weekly range, and a blue zone created in real time. The only thing I don't like, as mentioned before, is our low-hanging fruit's already been taken. We've taken out Asia lows, and we're tapping this tiny little 4-hour fair value gap. So this could possibly have delivered, but you want to proceed with caution. And then with NAS, this is a void trade setup, but still, we have a break, a double break to the upside, a retracement. Now this is where the market translator here saves you, because even though we had a double break and that's the dealer revealing its hand and that the market actually wants to go up, when you see that no 5M bullish fair value gap was even created, which is our foothold, and then we got a double break to the downside, invalidating this trade setup. So it saves you still. Like the points of confluence save you, because while we're waiting for that foothold, the market actually just crashed right through and said, this is an invalid trade setup. There's no point in looking for a foothold. You're going to get a lot of this back and forth today. So that's why we can't trade this market. But what I want to see still is after a double break, we still get a retracement. I still want to see a spotlight confirmation as well, which will also cause a retracement to happen. Finally getting US 500 here under control. There you go. Okay. But right now, as it stands, I cannot buy this market. I cannot buy US 500, and I cannot trade NAS because of the double breaks in both directions. So instead of jumping over to another asset like oil today, I'd actually rather just walk you through this. I want to show you that even in the worst of worst conditions, you can still read the market. That's what this is supposed to be. This is a translator. So as mentioned before, when you see a blue zone created in real time, usually the market pulls back to that and then continues. There's a higher chance that the market could drop from here. But at the same time, NAS, since we got a double break, has to do a retracement first. Now, how deep will that retracement go? And will it force US 500 to pull back up into the NYC opening fair value gap? We'll see. But the drop of both of these is technically dependent on NAS right now. This has already done everything it needed to do. This thing could drop from here if it wanted to, but it's not going to until NAS is ready. So we'll just wait and see. That was the double break candle. This red one right here. Now I want to see a retracement back to one of our key zones here. Most likely just the NYC fair value gap. There is a blue zone down here as well. That's the only other thing that concerns me, because it could just drop from here just like it's dropping from here. This blue zone, this blue zone. Remember I told you when you're looking at two diverging pairs, you're going to be able to find similar levels even though they're not the exact same levels. And that's another thing that this market translator does for you. It lays out all these points that you'll be able to match up from here to here. There'll be different ones, like the DSD might be a blue zone on this one. The purple zone might be, um, again, the bottom of the London range. You're going to be able to pair them up, even though they're going to be different points. You don't see that in any indicator. You have to just wing it with your eye and go, okay, well, why is it turning around here and why is there divergence? No, this is why there's divergence. You've hit a key level. It's just going to be a different key level, but they're going to be paired up perfectly. So right now, again, we've hit the DSD high. We've hit the DSD high, and that's where we're gesticulating right now on NAS. That's not a coincidence that we're at the purple zone. A key level matched with the key level. Exactly. This makes divergence so much easier. So we're waiting for NAS to do some kind of a retracement. Again, hopefully back to the New York fair value gap. This is where they will manipulate people. This is where people will be going long and people going short. So this is where they're going to probably pull NAS back into just to engineer new liquidity. Now, that doesn't mean that I want to buy NAS into this. Remember, I told you right now I can't do anything with NAS. It's got double breaks in both directions. It's an invalid trade setup. US 500, on the other hand, has a clean double break to the downside. What it doesn't have is a retracement yet. It hasn't. This is the first 5M fair value gap that was left. It also happens to be the first NYC fair value gap. A lot of confluence right here. So we want to see if the market comes back up and taps any of these zones, or if they just hold US 500 right here at this blue zone while they do a retracement for NAS back up here, take out these highs, and then set up short. But right now, I'm more interested to see if US 500 is going to drop versus anything that NAS is going to do. NAS has to give me a spotlight confirm. There's a lot of confluence that NAS has to do before I'm interested in even taking a look at it. It would have to, first and foremost, give us a confirmation. We just got a confirmation on US 30. Let's see which direction US 30 just confirmed. Remember, all these indices are supposed to be somewhat aligned. I want to see if we got a bullish or a bearish. Obviously, we got a bearish confirmation on US 30. US 30 looks a lot more like US 500, the S&P, and you got a double break to the downside. Now the only thing here, from the looks of it, just eyeballing it, just want to see. So we've taken out all the lows and the weekly range. So it's actually already tapped its weekly range for Thursday. Well, that was a runaway market. Didn't look like it really let anybody in. Didn't even tap this new blue zone that it created and didn't even not pull back into, just dropped from there. So now let's go back to US 500. But again, this is more confluence to the downside. So we could see US 500 just drop from this blue zone and not do a retracement. I'm just not interested. I don't like to see this kind of divergence. This is too much divergence. Let's see if NAS reacts off this fair value gap here. It's not much of a retracement for me. I would have liked to seen a proper retracement in here. This is the golden zone where they engineer new liquidity. So it only makes sense for NAS to come back up into here before it drops, if it's actually going to drop. A lot of 15-minute fair value gaps down here. Not to mention we're just on the verge of a crossover here. I believe we already did crossover. But that's how you read this. Whether or not you're going to trade it, I told you before, just because I know which direction the market might be going doesn't mean I'm going to trade it. I have to stick to my rules. If the rules tell you don't trade, it's an invalid trade setup. What they're telling you is not that your direction that your directional bias is wrong. It's saying that there's going to be a lot of muddied waters. It's going to take longer to move. It's going to be very manipulative. It could even come back and wick your stop loss and then head in that direction, in the direction of your directional bias. That's what it means. That's why we avoid days like this. I still trust this strategy, this market translator. As mentioned before, that's what we've created here, a market translator. The markets are controlled by a very sophisticated algorithm, a very elegant algorithm. This is not a time lagging indicator. None of those work. If you're looking at EMAs, if you're looking at anybody's strategy, resistance, and support, or you're looking at harmonics patterns, all that's garbage. This is literally reading the market for you and telling you, this is the manipulation move. These are the targets. This is where it wants to go. This is what it's drawn to. This is what it's actually going to bounce off of. These are the inefficiencies. This is where the liquidity is. This is translating all that for you. And it's backed by 20 years of aggregate data that shows you that. So as mentioned before, I'd actually prefer they hold US 500 here while they run NAS back up into here. Take out these stops for the people that went short here. Trick some people, trap some people here thinking that it wants to go long, and then give me a proper 5M fair value gap to go short. Right into this 4-hour fair value gap London lows and most likely the weekly range down here. That's what I'd like to see. So I want to see them hold up US 500. I don't want to see US 500 get too high. If it does, it's fine, but NAS is what's going to dictate when both of these drop. So we're going to walk you through it. I'll show you how that's actually done. It's going to require a little bit of patience, but we got a lot of time. About 10 minutes away from 11. So we still got 40 minutes left on our stream. I hope you're taking notes. If you're following along with us, you have to be able to recognize these setups. Every single day, my team is working on making this market translator even easier for you. Literally, when it's done, it's going to paint out a box for you with literally a star. And that's going to be your indication of the highest probability trade setup. It's going to be anywhere from 70 to 80% accurate. Whether or not you want to take a trade there is completely up to you. We cannot execute these for you. Again, this is not financial advice. What we're doing is actually showing you algorithmically where the highest probabilities are for this market to actually enter from and exit from. That's what you'll get out of us when we're said and done. By the time this market translator is fully complete, that's what it'll be capable of. I'm going to jump down to the 1 minute here on US 500 and see if we've actually created a 1 minute bearish fair value gap. Yep. This thing is ready to push from here, but not until NAS has given us something else other than this mess. We're close to getting a bearish confirmation here. This will seal the deal. Remember, once you get the spotlight confirmation, there's an 80% chance that the market will not go back and break the other side of that range. That's what 20 years of aggregate shows us. That's how algorithms work. They repeat. You're able to read them. You're able to actually translate them properly. And then as soon as we do get that confirmation, there's another 75% probability that the market will retrace back into our dealing range before it makes that move down. But as mentioned before, the blue zone is the area of interest right now. I can just visually look at it. I've seen it too many times. But until until NAS has showed me that it actually wants to drop, I'm not interested. We're actually getting a little bit of a power of 3 right now, consolidation. We can get a manipulation up and then a distribution to the downside. Now keep in mind the model itself plays a big role as well. Right now we have an upside expansion model and a buy model. So what does that mean? It means the bigger move, which will most likely take place around 1 o'clock, 1:30, that's past our window of opportunity, but the bigger move will be to the upside. So as soon as it's delivered to the lows, it's going to want to shoot up, and that'll be the biggest move, most likely, taking out these highs and running right into this 4-hour fair value gap up here. But when that happens, we don't know. That could be, again, after our window of opportunity. So we don't want to wait around for it. We just want to translate what's happening during the session. But the model plays a big role. That's why you want to line everything up. You want to be in a market that has a bullish bias on the higher time frame. During the session, you want a buy set up in an upside expansion model, and you want either a break to the downside or a double break to the upside. All of these things line up together to let you know that this big move is going to be to the upside. We're close to getting a bearish confirmation here. 32 seconds. Let's see if this sticks. If it does, then we'll get most likely one more retracement back up here, take out these highs, maybe tap the 20 EMA, and then drop from there. The only reason I'm not interested, as mentioned before, two things. One, we've already have a invalid trade set up because we have two double breaks. Anytime you see two double breaks, 2 dBs, that invalidates the trade setup. Secondly, we've already taken out the low-hanging fruit. The low-hanging fruit for me was Asia lows. That's what I was aiming for. So if it's already taken that, I mean, can it drop, as mentioned before, can it drop all the way to previous day's low and then the weekly range? It can. I usually aim for the low-hanging fruit just to be safe. I'm one of the safest traders you'll ever meet. I want all my directional biases to be in the same direction. I do not like to counter trend trade, and I aim for the low-hanging fruit. I do not get greedy. 1 to 3 risk to reward. We move our stops after we've hit 2 RR and takes them off the table. Then we're in a safe trade. That's the goal. Capital preservation is the first goal. Everything else comes second. But 5 minutes till 11. So we do have a bearish confirmation now from US 500. Still waiting for that bearish confirmation on NAS. Remember, 75% chance that the market will retrace after we get that confirmation. Just waiting patiently. 1 minute 49 seconds left. Still waiting for that confirmation. Forty seconds left. Let's see if this confirmation sticks. I'm also hitting this 15-minute fair value gap right here. So now it's going to use that as its reason to retrace. There you go. There's your confirmation. So now let's see a retracement back to the 20, maybe to take out these highs. Or it could just continue to drop from here. Markets seem to be paused up here. We want to see a retracement back to the 20 EMA at least. Hasn't left any other fair value gaps here. So continuing to drop still. As mentioned before, that's where I assumed that it was going to drop from the blue zone. Anytime you see a blue zone created in real time, the market usually pulls back into it, especially if the NYC opening gap is left open and becomes a breakaway gap, then the blue zone usually acts as a full rejection. Market bounces into it, pulls away. The only thing was I was waiting for NAS to give me a different setup. I thought NAS was going to do a deeper retracement before dropping, and it still could. Who knows? Just NAS didn't really give us much. Nor did it actually leave open any fair value gaps. Remember, those are our footholds to climb up or down. That's why this thing becomes an invalid trade setup as well. Muddied waters. These are not easy trading conditions. That's the thing about trading. It should look easy. It's not, but the trade setup should look that easy, that tempting, that you want to take it. Nothing about this looks easy or tempting. So far, US 500 is the one that's been the most consistent. We had a double break. We had a tight pullback with the 5M fair value gap created, which also happens to be the NYC fair value gap. That was not tapped. Then we had a blue zone created in real time, which became that rejection point. And now most likely heading down to this consequence encroachment of this 4-hour fair value gap, and maybe even down to previous day's lows, but not interested. Continuing to still drop. This 15M fair value gap right here. About 20 minutes left in our stream. Soon as US 500 hits the midpoint right here, we'll consider that delivered. Looks like NAS is at least beginning a retracement here. Let's see how high that goes. Most likely just to take out these highs in 20 and 50 EMA. We'll see. That's why it's important to have rules and stick to them. So you don't have to second guess yourself. As mentioned before, this is a invalid trade setup as far as my rules go and as far as the rules we teach. You're always going to have a few people that don't follow those rules. They've seen the pattern setups too many times. They think, hey, it's going to make for an easy trade. I know it's going to drop. That's the whole point of rules, right? Sometimes they keep you from trade setups that go in the exactly how you think it's going to go, but still, they also protect you at times when it doesn't. And the thing about rules is they have to be definitive. So as soon as US 500 hits that midpoint, we'll call it. About 15 minutes left in our stream. And again, they could just stall the market right here. And then have a bigger drop later at 1 o'clock in the afternoon. As you can see, US 500 technically tapped that 4-hour fair value gap. Zoom in here, right there. So that's technically delivered to. I'm going to get rid of all these little ones. It's already run right past them. That's the other thing too when you have a double break like this. Since we've already taken out previous day's low, we've already hit the new day opening gap. We've hit a lot of levels here, including this 4-hour fair value gap. This market could technically start reversing from here. Reverse from here and then fall in suit with the original double break to the upside. Another reason why these trade conditions are not favorable. Nas trying to do this retracement now. I got 10 minutes left. think we'll actually call it there since US 500 has already hit this 4 hour. But I'm going to leave you with some homework. Come back, take a look at the market right around 1 o'clock. See if a bigger drop happened or how muddied the waters actually got. Was it really worth it to be trading in a market like this? How deep did it retrace? Which direction did it go? Which one of the double breaks actually held true? Make notes. But overall, this is why we avoid these conditions. When you get a double break, when you get two double breaks, it makes for muddied waters. And US 500, as mentioned before, you can check the stream. I said it was going to drop most likely from the blue zone. Anytime you get a new blue zone created in real time, the market just comes back, taps it, and drops. But you want it to be in confluence with everything that's happening on NAS as well. And NAS wasn't ready for that drop. At least it didn't give us the formation that we're used to. The proper retracement and then a 5M fair value gap short. So that was the reason we avoided it altogether. But this is great practice. You want to be able to just take a quick look and read this. And that's the more we evolve and progress with this market translator, the easier that'll be for you. When it's all said and done, you'll be able to take one quick look at this and go, okay, this is not the kind of market I want to trade. Or this is the perfect trade setup. But you'll be able to recognize it in a heartbeat. This is for beginners. You know, people always ask me, like, do you need some kind of understanding, some kind of rough foundation in trading? No, actually, beginners make the best students because they're not as prone to FOMO. You can teach them the rules and tell them to wait exactly for this one specific trade setup. You know, their brains are not stuck on old strategies or things that do not work anymore. So this is actually perfect for beginners. It's a strategy that you can actually master in 5 to 7 days, and then you practice for 30 days in a demo account until you fully understand it. Then you're on your own, or you can trade with us. But at least you'll understand exactly what it is that we're going through and the stuff that we're actually mentioning. But anyways, we'll call it there. Come back, take a look at this market at 1 o'clock and use this as your review. Today is Thursday, so we'll be live again next week, Tuesday. We'll see you guys then. Have a great weekend.